happy early morning. I am up ridiculous early, as you can tell from my chart. The Asia session just finished. So I'll tell you what kept me up is I kept thinking about these prop accounts, and I want to talk about them a little bit here. Now on Saturday, I'm releasing a video called Never Blow an Account. So look for that. But I want to talk about how to manage not blowing an account on a daily basis. Okay? So let's talk about this for a second. So you can range from 25K accounts up to 300K accounts, basically. Okay? Now, the 25K account is like the Toyota Camry, the Toyota Corolla, the Honda Civic, maybe the Honda Accord, somewhere in there. It is reliable. It's going to get you there. It's going to be low cost to maintain. And you go all the way up to the Ferrari of prop accounts at the 300K. And I'm sure there's companies that offer bigger. Is that the Bugatti? Is that the Ferrari? Heck, oil changes on these cars are $2,000 to $20,000. I can't really afford that. So I tend to be on this lower end of prop accounts. I don't mind the Corolla. I don't mind the Camry. And I believe that the turtle wins the race. The turtle wins the race. I do know that if you are a newer trader, and here's the definition for that, for this purpose. If you have not had 3 profitable years of trading futures, you are still a new trader. I would skew toward being on the lower end of these, okay? I have a video in my group and on my channel called how to evaluate prop evaluation accounts, okay? Just type in prop accounts or whatever into the search in my channel and you'll see it. And I go through why I favor this account, because the drawdown and the profit loss is 1-to-1. Make 1,500 without losing 1,500 from the highest watermark. This 300K account, you got to make 20 grand without having, I think, $6,500 in drawdown or $7,500 in drawdown. That's about a 1-to-3 ratio. Not very favorable. Keep that in mind. Let's continue with the car analogy. If we're going to go on a trip, the first thing you're probably going to do is check your gas. Okay? The gas will tell us how far we can go. Well, the equivalent of that for the prop account is how much drawdown do I have left? How much drawdown do I have left? On this 25K account, that's the one we're going to talk about. When you start day one, you have a $1,500 drawdown. You get to decide on day one, how much of that drawdown am I willing to risk? And every day in trading, you are making the decision, whether you know it or not, how much of the drawdown am I willing to risk today? So check your drawdown and make a decision, how much of that remaining drawdown am I willing to risk? Are you going to be willing to risk 100% of it today? I would think that's not a prudent trade plan. I think you at least want to no more than 50%, right? I wouldn't risk more than 50%. In fact, the percentage I would recommend would be lower. That percentage, though, is very much going to be based on several factors, in my opinion. For example, today is NFP. 3 days from now is CPI. 4 days from now, trading days, is FOMC. Given that environment of not only today's news event, but the news events of next week, how much of the drawdown should I be willing to risk? 0 is an acceptable answer. In my opinion, it's prudent to be on the much lower end of the percentages. FAFO. Screw around and find out. For the last week, I've been saying Wednesday through Friday is probably a no trade zone. Trade small, if at all. I've said that every morning. Trade small, if at all. What does that mean, trading small? That means trading obviously less contracts, but if I'm going to be even more specific, trading a smaller percentage of your remaining trail down. Okay? Because that's all that matters. It doesn't matter how much profit you've made. Okay? Especially in these higher accounts, because you can blow your account in a profitable trade easily. You can blow your account in a profitable trade. Harder to do that in these lower accounts. Look at how much gas is in the tank. That is equivalent to how much drawdown is left in your account. How much of that am I willing to risk today? It's Friday. It's FNP, CPI in a couple of days, FOMC the day after that. How much should I be willing to risk? Contract rollover. How much am I willing to risk? End of the year, how much am I willing to risk? Every day you make that decision whether you know it or not. Look at the trailing drawdown, pick a percentage, write it down. Write it down. Or come up here, click this little tool and say, all right, I'm willing to risk $200 in drawdown. $200 in drawdown. I'm keeping this on my screen. As we move around, I keep moving this around with me. I love that. You know why? Because it makes me be involved with this $200 drawdown. Don't forget. $200 drawdown, I'm done. $200 drawdown, I close the computer. Okay, let's say you were going to use this $200 drawdown today, which is not an unreasonable number if you're trading micros. So if I'm trading, let's say, a single contract, it goes against me 10 points. That's $50. That's got to happen 4 times. Okay. If that happens to me 4 times, I should be done. Yeah, I'm just wrong. Okay. And when you're just wrong, you're out. This is low probability environment. Low probability environment, the lower the percentage of your drawdown you should be willing to risk today. And remember, 0 is an option. Trade small, if at all. So Saturday, that video comes out. How to never blow a prop account. How to never blow an account is really what it is. So let's look here. 15 hours of consolidation, trend day up after a trend day down. Whoa. Okay. We went from our 50, and our 80 is, where's the 80? 80's right here. So once again, we're just playing back and forth through this range. And in fact, I've now drawn our range in here, guys. So I'm going to be looking at that this morning. Not even sure if I'm taking a trade today, but we're going to watch it this morning. So if you're a member of my group, we will be on Zoom today. But next week, we're basically taking it off. It's the right move. If we've had this 15-hour consolidation, we had this type of move, what in the world are we going to do here in the next week when we've had, how long have we been in this consolidation? I've been meaning to look that up. How long have we been here? 17 days. Okay. I didn't realize it was that many. I thought we were closer to 12, but basically 17 days of consolidation. So let's do this. Let's go to a daily chart. Let's go to a daily chart. So I'm on the Z contract instead of the continuous because on TradingView, the continuous is 50 points higher, something like that. So it's already done the contract switch. And so, yeah. Now let's do this real quick. Let's draw in this for this consolidation period. Okay, that's about how long in time. And what I'm going to do is I'm going to take this, I'm going to drag it to other consolidation periods. All right, this is a little less, and look at the move. Okay, that's almost the same. Look at that move. That's about the same. Look at that move. This is about, actually this was even longer of a consolidation period, and then you finally get that move. So we have a big move inbound. We have a big move inbound. Sometime in the next week. Will it be today? I don't know. But sometime in the next week, you would think we're going to have a big move inbound. So be careful. It's going to go one way or the other. Now, as I'm looking at this, let's go back to this hourly chart. Which way is this bad boy going to go? Typically, when we're in this area, I am looking to be short in this upper range, and I'm looking to be long down here. Because if I'm long here and it breaks out to the south, my stop is the smallest. If I'm short here and it breaks out to the north, my stop loss is the smallest. If I can get long down here and I'm in this trade and it breaks out to the north, oh yeah. So it just makes the most sense to be looking for longs down here and shorts up here. Because let's say I short up here and then this price decides to break out to the south. Oh yeah. You want to be in that trade there. So by me longing down here, I have a minimal stop loss. By me shorting up here, I have a minimal stop loss. And if that is the pullback for the break, great. Now, if it also breaks out to the north and I get a nice pullback to one of our levels, I will take that long and go with. But if it breaks out and keeps going, oh well, I missed the move. Who cares? There's easier days and there's easier trades.
Stay green, my friends, and to learn more about our group, go to microstrader.com.